Canberra's cash splash for families has been a boon for Woolies. Australia's biggest supermarket chain has delivered annual sales growth of around 5% as it grabbed more customers and market share. But Woolworths is fighting price deflation with no end in sight to the supermarket war with rival Coles. Emily Mitterhumer has the story.
The supermarket price wars have been good news for consumers, but Woolies is having to do more than ever to achieve growth for investors. Sales in Woolworths' food and liquor division lifted 3.8% on year, coming in at $37.6 billion. That's a significant improvement from last quarter, where sales growth was flat.
We've seen a resumption of comparable sales growth, and that's really the most important number.
Comparable store sales also grew 1.3%, and the supermarket giant also managed to increase its market share over the period, despite difficult trading conditions. However, falling prices due to an ongoing price war with its closest competitor Coles may have a significant impact on margins in the future.
Trading continues to be impacted by deflation, particularly in produce and some of the other fresh food areas. The standard shelf price movement index, which is our measurement of inflation deflation for the year, was actually zero, and for the fourth quarter was negative 0.7. And just as a comparison, for the same quarter last year, it was a positive 3.1.
Average prices for the supermarket chain also fell by 4.3% in the fourth quarter, adding to a broader trend of expected flat price growth when the latest CPI figures are delivered on Wednesday. Woolies has this year opened a record 38 new supermarkets and pushed aggressively into the hardware space via its Masters Home Improvement brand. But growth may be increasingly difficult to come by.
Their sales per square metre are actually coming down. And I think, if the largest retailer in Australia is seeing sales per square metre come off, then that's also important for landlords and other retailers. Despite the struggle to match previous growth in the long term, retailers are seeing some positive impacts from Canberra's cash splash for families and falling interest rates.
Truckloads of money left Canberra in the last 6 weeks, really big dollars. And you can already see that in the retail numbers. You can see it today in Woolworths talking about its better performance of late.
For now, however, Woolworths and other retailers are having to battle falling prices, but the cost of living still continues to push higher on the back of rising costs for services.
Many other prices in Australia are still pretty robust. Rents for housing, for example, prices for power and water, education costs. There are a whole bunch of service costs that continue to rise pretty rapidly here in Australia.
Investors today responded positively to the news of a turnaround in sales at Australia's largest supermarket chain, sending the share price higher despite a negative day on the broader market.